Hello and welcome to our channel. In this video, we'll discuss the best ETFs to buy and hold forever. So, before starting the video, we request you to like this video and subscribe to this channel. Let's get started. There are several different ETFs available. Some follow significant indices like the S&P 500 or the Nasdaq Composite. Others expose investors to specific geographic regions like China or developing markets. Still, others concentrate on certain industries like banking or technology. ETFs can assist in reducing the risk associated with stock ownership in a difficult market climate like the current one. This is because they eliminate the hassle of investing in individual equities and have lower volatility than individual stocks. Although they operate on a similar concept as mutual funds, they are less expensive and simpler to acquire and trade than standard mutual funds. Now, let's go over our list of the top ETFs to buy today and to hold forever. iShares Core S&P 500 ETF, ticker IVV. Many investors start with the S&P 500 index, which consists of 500 of the biggest domestic publicly listed firms. The largest and maybe most popular alternative is the SPDR S&P 500 ETF Trust, SPY. However, it's important to note that this fund has a somewhat higher cost structure for essentially the same approach as IVV. Consequently, this iShares alternative is a superior long-term ETF. Just bear in mind that due to the prominence of this industry in the American economy, top holdings include tech giants Apple Incorporated (AAPL) and Microsoft Corporation (MSFT). Additionally, around 24% of all assets are in tech companies. The yearly cost is 0.03% of the investment's expense ratio, or $3. AUM, or assets under management, is $303 billion. Invesco QQQ. Invesco Trust ticker. Invesco Trust is an ETF that tracks the biggest non-financial companies in the Nasdaq 100 index. Invesco QQQ Trust. He consecutively outperformed the S&P 500 index since its inception in 1999, and a fund has demonstrated a growth of $10,000 as of December 31, 2021. Does Invesco Trust expose investors to multiple innovative sectors such as augmented reality, cloud computing, big data, mobile payments, streaming services, and electric vehicles, among others? The largest underlying security in Invesco Trust portfolio is Apple Incorporated. In March of 2022, Morgan Stanley analyst Kitty Hubert said that Apple's latest launch event was in line with her expectations. While it also highlighted the continued output of Apple's world-class innovation engine, she kept an overweight rating at a $210 price target on Apple Incorporated shares. Delete hedge funds are extremely bullish on Apple Incorporated. In the fourth quarter of 2021, 134 hedge funds reported owning stakes worth $186 billion in Apple Incorporated, up from 120 funds in the previous quarter holding stakes in Apple Incorporated, valued at $146 billion. Berkshire Hathaway is the largest shareholder of the company with an estate worth $7.5 billion. Vanguard Growth ETF, VUG. If you believe that the tech industry will develop significantly over the long run, you might want to explore this growth-oriented Vanguard ETF instead of a standard S&P index fund. This fund starts with the biggest U.S. organizations and adds a layer of screening for profitability and sales growth, steering clear of dormant industries and toward businesses with a strong track record of development. This fund now consists of roughly 250 equities, with the tech sector accounting for about 41% of the portfolio. Materials and energy are each weighted at less than 2%. VUG is an inexpensive alternative to keep for the long term for investors who don't mind taking on a little bit more risk in search of growth and rewards. The yearly cost is 0.04% of the investment's expense ratio, or $4. AUM, or assets under management, is $71 billion. Franklin US Low Volatility High Dividend ETF. It's simple to understand why dividend stocks are growing in popularity in the present market. Dividend yields increase as stock prices decline. Since paying a dividend is an indication of profitability and often demonstrates a company's capacity to endure a recession, dividend stocks also frequently prosper during down markets. Franklin U.S. Low Volatility High Dividend ETF is one appealing alternative for a dividend ETF. Philip Morris, NYSE, PM, Eaton Corporation, NYSE, ETN, Seagate, Nasdaq, STX, and Emerson Electric are among its top holdings, NYSE, EMR. Franklin has a yield of 2.9% and a 0.2 acceptable expense ratio. Vanguard Value ETF, a VTV. Value, after the course, is growth's opposite. This year, investors have taken a more cautious attitude to equities, which has allowed VTV to snare additional assets and increase its spectacular portfolio to $100 billion. Compared to the last long-term ETF, the top two sectors here are healthcare and financial services, which account for 23% and 20% of the portfolio, respectively. The largest single positions among the 340 or so equities are insurance behemoth United Health Group Incorporated, UNH, and Class B shares of Warren Buffett's Berkshire Hathaway Incorporated, which serve as examples of the types of firms in these sectors that this fund prefers, BRK.B. The yearly cost is 0.04% of the investment's expense ratio, or $4. AUM, or assets under management, is $100 million. Schwab U.S. Small Cap ETF, SCHA. However, if you're interested in a long-term ETF, you might also want to look past the established businesses of today to the startups with the most potential. SCHA, which owns stocks with a market capitalization under $10 billion, takes that tack. Less well-known tech companies including Lattice Semiconductor Corporation, LSCC, Casey's General Stores Incorporated, CASI, and biotech company Halozyme Therapeutics Incorporated are included in the portfolio, Halo. Smaller stocks carry higher risk, but a broad list of more than 1,700 positions will assist to tame volatility. Currently, no single stock is worth more than approximately 0.3% of the portfolio as a whole. The yearly cost is 0.04% of the investment's expense ratio, or $4. AUM, or assets under management, is $14 billion. Vanguard Total International Stock ETF, VXUS. All of the funds up to this point have had a domestic concentration, but this ex-US Vanguard fund is specifically intended to steer out of the domestic market. Instead, it gives access to the biggest equities in advanced economies like Japan and Europe. You're certainly familiar with some of these well-known international brands, like Dutch energy juggernaut Shell plc, Shell, and global healthcare providers like Roche Holding AG, RHHBY, and AstraZeneca plc, AZN. Building a portfolio with a variety of regional holdings might assist you to avoid depending too much on the ups and downs of the American stock market if you're seeking long-term ETFs. The yearly cost is 0.07% of the investment's expense ratio, or $7. AUM, or assets under management, is $50 billion. Aventis Small Cap US Value ETF. The Avanti Small Cap US Value ETF has been among the best performing small cap ETFs in 2022. Avantis is a managed ETF, which means a financial manager actively chooses which companies to hold, in contrast to the index funds on this list. Dick's Sporting Goods, NYSE, DKS, Macy's, NYSE, Alcoa, NYSE, AA, and AutoNation, NYSE, and are some of its largest holdings, and no stock accounts for more than 1% of the ETF's entire value. Since they might not be profitable or as well capitalized as their large cap counterparts, small caps tend to be more volatile than the overall market. Small caps may thus not have the same access to cash, which makes them more vulnerable during a downturn. With an expense ratio of 0.25%, the Avanti Small Cap US Value ETF is affordable. iShares Core US Aggregate Bond ETF, AGG. We've discussed equities thus far, but any diversified portfolio should also take bond exposure into account. That is especially true since interest rates have increased significantly this year, ultimately pushing yields up to acceptable levels. Government bonds, corporate bonds, mortgage-backed securities, and some overseas bonds are all represented by AGG, which spans the full investment-grade bond market. The 30-day yield has increased to 4%, but the trailing yield is only approximately 2.2% due to the more recent and higher-yielding assets. And that may go up considerably more if rates keep rising. With more than 9,900 unique bonds from debtors that are immune to default, including the U.S., you may be very certain that this bond fund will continue to pay you over the long term because it is backed by the U.S. Treasury and megacap companies like Johnson & Johnson, J&J. The yearly cost is 0.03% of the investment's expense ratio, or $4. AUM, or assets under management, is $82 billion. So this was today's video about, we've discussed with you the best ETFs. Don't forget to like this video and appreciate our efforts by subscribing to our channel. Thanks for watching.